Here we go, guys. The top 5 financial stocks for you guys. Listen, welcome to the Independent Investor Channel. My name is Ryan. It's so good to be with you. Coming to you from the Big Apple, New York City, New York. Thank you so much for tuning in. I just want to do a quick rundown of my top 5 financial sectors, okay? This is part of a video that I'm putting out to make sure that I'm putting cornerstone options out there for you guys to make sure that each of those cornerstones have certain options that you can put into your self-managed Roth IRAs to make sure that you have adequate representation of each of the different sectors to make sure that we're diversified amongst our different sectors. Okay, so financials is just one of the sectors that I recommended. I just did my video on the energy sector, and like the energy sector, I like financials. I think we should be a little bit overweight with regard to the interest rates being on the upward swing. It should help earnings for these guys. Especially if we get any type of tax reform from the new administration. This should really push up financials. We're talking about a recommended sector weight of around 15%, guys. So for every $100 that you have invested, $15 should be devoted to having some core holdings in financials. Now again, I'll explain, you don't have to own all these stocks, okay? Really, the idea is that you pick the very best one that fits your guys' portfolio, and I have these actually in rank order, all right? So if you just want to not do any homework at all, go ahead and put my number 1 holding in there and you'll be just fine, all right? If you're looking to build out 2 portfolios and you've got a spouse and you're looking to build, portfolios against each other and your risk tolerances are different, I offer an honorable mention category over here for you guys that might want to take on a little bit more risk, but maybe take on a little bit more reward as well. All right, so my number 1 pick is JP Chase. It is the biggest bank in the world. It's a cornerstone. I have it number 1 for a reason. I actually currently don't own JP Morgan currently. I actually took it on a pretty big upswing here recently and have traded out of the position, but I think it's holding really, really nice around the $90 level, and for a $900 for a 10 share chunk of a portfolio to give yourself some financial exposure, I don't think you can do any better than JP Morgan. All right, so JP Morgan's my number 1, pays 3.2% dividend, so real healthy dividend. It's a buy that you can put into a cornerstone portfolio, and it can be that solid financial foundation for you going forward. Set it up on a dividend reinvestment within your self-managed Roth IRA account to make sure that those dividend payments that are being repaid to you are tax protected. Make sure that money can grow tax protected. And of course, the self-managed portion is the free of fees section that we advocate all the time. The second pick here is Citigroup. That's actually my number 1 holding. It's my particular favorite. I have not sold out of that position. I've taken on it a pretty good upswing from the low 40s, and now we're into the upper 60s now, so I've had a very, very good gain on it. I actually think there's more gains to come in Citi. Fairly conservative dividend. I think it's around 2% for Citi, so not so much on the dividend reinvestment, but it's a name that I don't mind holding as a cornerstone piece to have myself some representation in the financials. Citigroup is my representative, okay? Wells Fargo is my complementary and my spouse's account, all right? So Wells Fargo is the cornerstone in her particular account. It gives her a better dividend payment, around 3.25%. In her account, the Wells Fargo, again, a very well-established bank, even in light of the conspiracy that they just had late last year with the fake account scandal. That actually whacked the stock pretty good. It dropped about $20, and I actually picked it up there, and we're back to current levels. So I made a ton of money on the account scandal. Really unfortunate. I think a lot of that was overblown, and I think management will take the appropriate steps to try to make that stuff right. When you've got rogue employees doing that, and even if it was, a philosophy of the company to aggressively sell accounts like that, then that's something that the new active management can step in and try to fix for Wells Fargo, because it's too important to their reputation not to get that right. All right. Berkshire Hathaway. We're going to buy Berkshire B on the Independent Investor channel. We don't buy Berkshire A. If you have a few $100,000 to buy one share of Berkshire A, by all means go ahead. This gives you exposure to the Berkshire Hathaway company. That's Warren Buffett's company. He is the mastermind, really, and really my sole motivation. I have a lot of different influences in my investing career. Warren Buffett's right up there at the top with regard to his philosophy, but as far as Berkshire B and its return and devotion to shareholders, you can't ask for a better financial exposure in the corner of a portfolio. So you can kind of see how you can kind of take a Berkshire and maybe match it up with one of these, other more aggressive players, or you can go conservative depending on your risk tolerance to make sure that you have or are exceeding this 15% benchmark, because we really need to be at least at this 15 or above, because financials is one of those sectors that you'd actually be overexposed to right now. I'm actually at about 19% on financials right now, hoping for, an upswing. I really think that they have a really, really good tail end, which was evident after the election last year, and they've really moved up nicely, and I think that's going to continue going forward. All right, the last one is BlackRock. They're the ones that they're asset managers, and they've got an extreme amount of cash on hand. They pay a really healthy dividend. Now, the only downfall with BlackRock is BlackRock's going to run you over $300 a share. So 10 shares is going to push you up into the $3,000 category. I've owned BlackRock in the past. I've made a lot of money with it. It just does nothing but go up. But if you buy this and you set it up for dividend reinvestment, I don't mind that, putting this on here after Berkshire B as the fifth slot here in order of precedence. If you guys really just don't like my top four picks, go ahead and take my fifth pick, because it's going to make you money over time, and I'm not going to push out information out there to you guys in stocks that aren't going to make you money. Now, in the basically the runner-up category, I guess, over here, because everybody likes stock picks, so I like to push them out to you guys, but I'm not going to push out garbage to you guys. I do a lot of research on this stuff, all right? And I just I push them out there, and you guys can kind of do the research yourself, because really, there's no one person that's going to watch a video on stock picks and agree with every pick I say, all right? There's not. And I love to hear your commentary at it. So if you have different ideas about financial exposure, I'd certainly love to hear it, because I'm looking to evolve as an investor just like you guys are. But Bank of America, that's phenomenal. Really, Bank of America could really slot over here into one of these categories, and certainly justify owning Bank of America if I put one of these larger banks, JP Morgan, Citi, Wells Fargo, in with a Bank of America. Perhaps maybe you want a nice safe dividend paying stock, and then you put your Bank of America in the same portfolio to meet your 15% allocation. I'm okay with that. The Blackstone Group does the same level of business as BLK. They're basically an asset manager, all right? They buy properties. They have trading platforms and forums and trading products that they put out there. Blackstone has, I believe, over $1 trillion in assets under management. They're huge. And the asset managing team there really knows what they're doing. This is actually the only limited partnership that I actually have on the board. It's not actually an open stock, and I've owned Blackstone for a long time, and it is awesome. You get special dividends, you get long-term dividend payments. When I get paid my dividends, I get paid like 5 times over. It's really, really interesting, and it pays around an average of 6% dividend on that. Umpqua Holdings is one I just went ahead and throw it on here. It's a 4.5% dividend payer. It's actually my hometown bank. It actually started in my hometown of Roseburg, Oregon, and the Umpqua River goes right through the town. So hence the name Umpqua, but they've actually expanded up and down the West Coast, and they're a pretty good regional bank, as well as Key Bank that I went ahead and throw on here as just an asset that you guys can look at, and if you want to put it into your self-managed Roth IRA, it's going to make you money going forward, all right? Now, Morgan Stanley, that also could shift over here into one of the major bank players. You guys know that. and then United Bank Services is my last one, guys. Thank you so much for tuning in to the Independent Investor Channel's Top 5 Financials. Remember, this is piece to an overall portfolio to make sure that we have broad diversification and we have a certain allocation within that diversified portfolio that's going to represent the financial sector, and this is just how you go about doing it, guys. Listen, if you haven't subscribed to the channel, please hit the subscribe button. Recommend the information to anybody you know out there that's looking to build a portfolio forward or might just be interested in financial information. We talk about stocks, investing ideas on this program. Please share the information with anybody that you know. Leave your commentaries. I'm interested to know what you guys have with regard to your representative picks in the financial sector. Hit the thumbs up for me, guys. Thank you so much for tuning in. Good luck in your investment futures.